China's economic policy has enough room to fulfill demanding situations. State media Beijing China's monetary coverage has adequate room and sufficient gear, such as further cutting banks' reserve requirements, to cope with new challenges amid a shaky monetary restoration, a statement inside the state-owned Securities Times stated on Sunday. China's financial system grew just 0.4% in the second zone from the identical period last year, down sharply from 4.8% growth for the primary 3 months, the authorities mentioned on Friday, as giant lockdowns to extinguish outbreaks of COVID-19 hobbled the arena's second large street economic system. While June information confirmed symptoms of development, analysts do not expect a rapid recuperation as China sticks to its hard zero-COVID policy. The United States' assets market is in a deep slump and the global outlook is darkening. Looking out to the second half of the year, the inspiration of our financial rebound continues to be no longer solid and economic operations still face many uncertain and unstable elements, Sunday's remark said. In phrases of coping with new demanding situations and modifications that may exceed expectations, monetary coverage has sufficient area and enough gear. But many analysts accept as true with the People's Bank of China has only restricted room for in addition easing due to issues about capital outflows, as the U.S. Federal Reserve and other principal banks aggressively improve hobby charges to combat hovering inflation. The Securities Times remark referred to China's tremendously restrained financial policy stance for the duration of the pandemic, preemptive guidelines to stabilize capital outflows, which includes cuts in banks' forex reserves and a more flexible yuan forex, among factors that would provide a buffer to outside shocks. We will keep the yuan alternate price basically strong on an affordable and balanced degree and proactively and steadfastly control new challenges and new modifications, it mentioned.